Let's just start off about what you're seeing in the options market when it comes to mega cap tech and the Mag 7. How are investors playing that? Obviously, just so much weight on these reports this week.
Yeah, it's really incredible to think about everything that's going on this week. Look, the big difference, Frank, between the first half of this year and the second half is that we were incredibly exuberant from the options side, and people just had a lot of FOMO. They were worried they didn't have enough AI exposure. We saw a lot of upside buying, call buying. You see less of that now, and obviously that's not necessarily indicative of any fundamental view. I think it's more positioning. It's simply people have gotten long the names that they need to be gotten long. And so what we're actually seeing in the derivatives market is more folks hedging. And a lot of times that has to do with the fact that they're simply long. They simply have something to protect, especially in a year like this where AI has done so well.
All right, so people are looking for a little bit of protection, but it sounds like overall bullishness when it comes to these mega cap tech names.
Right.
Okay. Can I get your word of the day? Again, we just mentioned the NASDAQ hitting a fresh record close, first time since July. What's your word of the day? How do you see today shaping up?
Look, my word of the day is overhang. And the reason it's overhang is when you think about today, when you think about these next 2 weeks, look, there's just a lot of big events coming up, whether it be mega cap tech, the US presidential election, or even the FOMC. It's hard to get through each day for investors without thinking about the next day ahead. And that's why I think you're climbing this wall. And once that overhang is over, I think we'll really see the stock market pick a direction from there.
All right, as you're talking about this overhang right now, we do have a lot of potentially market-moving things coming up. I mean, you hit on it, the election, the Fed meeting, GDP today, jobs report coming up on Friday. With that in mind, how are investors just playing this volatility just for the broader markets in general, or the potential volatility, I should say?
Yeah, the one key stat in our market, which is the volatility risk premium, Frank, is just simply saying, how are future expectations for volatility compared with what we've actually seen the stock market move? And that premium is massive, meaning there's a huge expectation for forward volatility that we haven't actually seen in the past. And obviously that's related to the events ahead. But, in terms of the data you mentioned, there's a growing concern in the market that what if we don't get a Fed cut at all, if the data points come in a lot stronger? And so each data point day by day is incredibly critical, and it keeps shifting the narrative around what we'll see next week too.
Yeah, right now on the CME, 99% chance, according to the traders, that we're going to get a quarter-point cut. But again, some very big reports coming up, especially that jobs report that could influence the Fed's decision. I know you're also looking at another volatile part of the markets right now. That's the oil market. What action are you seeing there when it comes to options? We've seen, big price spikes, big drops on reports of geopolitical tensions in the Middle East. What are you seeing?
We're definitely seeing upside hedging here for this geopolitical risk. I think one thing that's been difficult for us to suss out in the volatility markets is whether or not this huge volatility risk premium is because of the elections or it's actually just because of ongoing geopolitical risk premium being baked into the market. And so, two energy proxies we like to look at, XOP or XEG up in Canada, are essentially a way to give you a hedge should that geopolitical risk get even more escalated than you use this upside in these names via options.
All right, Amy, before we let you go, we gotta ask you about trades in the option market. I know you don't give a stock pick, but we want to get a trade in the options market that's really set up ahead of the election. What are you seeing?
Look, there's an old adage, Frank, in the options market to hedge when you can, not when you have to. So the trade I like is S&P put spreads for November expiry. It's really simple. It's you're owning a near the money put option and you're selling a further out of the money put option. We've seen the S&P just make this incredible rally. We've got a lot of events ahead that could really turn the tides. And this is simply an insurance mechanism at a time where you're taking advantage of that volatility surface to get a payout should there be a drawdown.